Fellow traders, this is TheRumpledOne coming to you on Wednesday, December the 3rd. The year's 2025. Let's talk trading. Trading is as hard as you make it. These videos are for educational purposes only. Your results may differ from mine. As always, let's have risk management in place so we don't lose more than we're willing to lose while we're trading. Because if we do, talk about making trading hard. Losses can definitely make trading hard. You know, um, I think it was a Nirvana song, something about it's hard to make you make it hard, it's hard to make it, or it's hard to make it, you make it hard, or something like that. Anyway, um, you know, I was reason I'm coming to you late is because Walmart and I we were talking earlier and trading and working playing with the price action score indicator, and it I think doing something new, doing something a little different can sometimes expose where your weaknesses are. Um, with this method, it's really simple. Um, but I noticed I wanted to do some things, not necessarily to make it more difficult, but it's like I wanted to, I felt the urge to add this or change that, and then while in trade, sometimes oh well, here's a trade. It's like, well, no, that's not what you're trading right now, and it just makes it hard. And if you've read or studied any of the latest material out there on habits, you can see how you revert to your habit. And in other words, looking at these moving average lines, reverting to the mean or revert to the average, that's what happens. You have certain habits. And if you try to quote unquote break those habits, you can't really break a habit. You have to replace it. And every time you do something, you reinforce it. And if you do it over and over, then it's like exercising. You work those muscles over and over, it gets stronger. Well, if you have a habit of, you know, entering at the wrong time, you have a habit of not waiting for your entry, and every time you do it, you reinforce it, and especially if somehow it works out for you. And it's just one of those things where, when you look at the chart, there's just certain things that you can see on the chart. It was funny because I guess I was talking with Walmart a couple hours ago now, and price was right in this area, and I think at the time had a range of 116 pips or something, and Walmart was saying, it keeps trying to make new highs here. And when it does that, this late in the day, tendency it's going to keep going further, but he was done trading for the day. And so I kept that in mind, and sure enough, the Oracle was right. Um, but of course, you know, we were in the upper rat zone, and I said, "Hey, Walmart, these are rat trades." And I was looking, and then price pushed higher, and then it came back down, and I managed to, escape out of a couple of trades um, because I just loaded up. It's like, well, I just said, okay, well, if it keeps doing this, but it was really kind of simple to know when not to get in a trade. So, for example, price is pushing up here. I think is it making? Yeah, it's making another new high, and so it's like I want to go short, but it's like you got to wait for this candle to close because if this candle doesn't make a new high, then maybe just maybe you can get that short opportunity. But you're above the indicator 2 on M1, above indicator 2 on M5. Um, it's like no, and as you can see, you just wait. So now I got to wait again. I have to wait for this candle to close, and I got to wait for the next candle to close. But why do I want to go short? We've got, 10 hours in a row. Price is green. H4 is green. Everything is green. Why is it I want to go short? Based on statistics. And here we go. So now we pushed above. Now, had I been top scraping, I could have entered already. And so here is an opportune time to go short. But it could go against me. I don't know. That's trading. But it's not even the trade that I have been making, because see, I've got to wait for, uh, four or more greens in a row to then start to take the short by that method. So here, even though I might be able to make some pips, that's not what I'm looking for. And see, that's a habit that has to be replaced. If you look for more than one thing, you're bound to find it. As I mentioned in a video, a couple of videos ago, I think, when we look to get in trades, we can find a reason to get in it, but we got to look at the other side. Is there a reason not to? And that's what can be tough, because we don't want to just sit here and go, oh, look at all those pips I could have had if I'd only done this. But that's not what you do. And you can see here, price is kind of making that double top. Here, this is 1 minute, but you can see where these highs are. Maybe if we drop down, you can look at the 3 ball, so you can see here what's going on. So that 3 ball price is going to want to come back down, and it's even in the launch pad. But as you can see here, past 3 hours, some nice M30 trading ranges all over 10 pips. So, I mean, if you get half of that, that's not bad. And so, one of the things I've been looking at this, it's like when you take these kind of trades here and you're up a pip or so, sometimes, it's like, hey, if you're above the indicator 2 here on M5, just take your 2 pips and be happy. Because, price has been above indicator 2, it looks like most of the day, at least most of the past couple of hours. Look at this. And so you can see here, this candle's failing to make a higher high. And so let's not make it hard on ourselves. We're almost at the top of the hour, which will be a new H4. So it might even behoove us not to do anything for the next 3 minutes. Because you can see here, there's 5 pips, but then, it kind of started to get a little range bound here, and then it finally broke down, came back up, right here. That support turned into resistance. It came back down. And, these are stories that we can tell ourselves. But, once again, if you make it hard on yourself by trying to do too much, you could wind up over trading. And I forget, Walmart told me how many trades he had today. It was back to his old days when he used to do 100 trades a day or something. It was pretty high. But you might do something where you get mad and you start to do what they call revenge trading. I don't get my money back. Take revenge, and usually that doesn't work out too well. But right now we got a couple of signals. We're below the M1 indicator 2. We got a flip-flop box going to the south, and so for here, I might target hitting the EMA 5 and then just exiting out. And by the way, that trade that I think I got cut off the other day and yesterday too, they both panned out. Nice moves. And so, I was starting to look at this and I'm thinking, well, hey, you know what? This was only a -1. Maybe I should count that as 5 and take that trade. And so, even if I had done something like that, you can see here, it was only going to be worth maybe a pip or two. So, it's just one of those things where you kind of have to look at the whole chart and look and see what's happening, and not just this little area here, because that's something that traders can do. And that's why we say look left, see what you're running into, because the past sometimes tells you what the future may hold. And then on the other hand, sometimes you make it hard on yourself because you're so afraid. And if you have your stop loss in place, you already know what the worst thing that could happen is, barring some black swan event. So there's really no fear to pull the trigger. It's like, oh, but if I do this, what if it goes against me? It's like there's no reason to even have that thought. Just get rid of that thought. And then on the other hand, you know, trading is so much about timing, but it's one of those things where you can't beat yourself up, because if you got out of a trade and you made 2 or 3 pips, and the next thing you know, if you would have stayed in, you would have made another 5. Don't beat yourself up, because you could have just as easily you know have the trade go against you. So if you had a plan, like what did I say? I said, if I take this short, I would target the EMA 5. What happened? It hit it and it bounced. So, you know, we've gotten out with about what? Oh, 2 pips, maybe 3 pips. I'll be happy. I'm not gonna get upset if this thing now tanks, because I can just wait for my next setup. And if I get another setup and I actually get in on a short lower than what I got out of, that's okay. I'm not gonna worry about what could have happened. It's like, no, I got to trade. That trade's over with. It's done. It's like that's in the history books. That profit's already been banked. On to the next trade. And as you can see here, what happened? It bounced. So, and that's why I'm saying you just might want to wait and see what happens, for the next couple of minutes. And so you can see here, we're starting to push up again. But notice how the distance between the two indicator twos is lessened. So I'm still thinking this price just might do this, a turn down. We've got a couple of M30 candles that haven't been covered. I mean, okay, there's no imbalance there, but there's an imbalance right here, back down to the 25. So, there's lots of reasons. We're within 2 pips of the daily high. We got 4 hours left in the day, trading day here. So, and the one other thing is, if you get in this trade, like if you had taken this short, and then all of a sudden you see there's a long trigger, it's like, just get out. Don't be hoping and trying to think that this thing's going to turn around. If you cut your losses too late, pretty soon, you're not going to have much of an account. So that's just something else to consider. And you know what? With all that, fellow traders, it just goes to show it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.